J&J update. Is Jim Kramer wrong? You bet he's wrong. And I'm going to show you right now. And I'm going to explain why Jim Kramer says what Jim Kramer says. Does that make sense? Boya. Okay, I'll talk about that in a second. But J&J, has the recovery began? Has it begun? Begun? You know what I mean. In this video, I'm going to look at the intrinsic value. I'm going to look at the insider trading. I'm going to share with you some very important information, and it's all coming up right now. But J&J is up, and I think Jim Kramer is down and out. Of course, he's not. He's a TV celebrity. He makes videos, he makes films, he makes entertainment for you to watch, and it's all about numbers and ratings and excitement. It's very rarely about the actual fundamental facts of a stock. It's more to do with being entertaining, making dramatic TV. Let's look at J&J right now. As you can see, I'm very qualified to talk about it. It's the biggest part of my portfolio. In fact, I have $23,000 of J&J. Why? Well, because we are in difficult times right now. Even though my portfolio is rallying consistently, I'll share with you on the screen how well my portfolio is doing. I'm beating Warren Buffett again today. I'm beating the S&P today. I'm beating any metric today, actually, as I am most days. Not all the time, but most days. Warren Buffett's Berkshire Hathaway has been awful for weeks now, but and the general markets have been awful. But we need good value, but we need defensive as well, and we need defensive stocks, and we need stocks that are oversold. We need stocks that have had a bad run, and so on and so forth. Now you need to do your maths on this, and you need to do a bit of studying. This isn't an easy one to follow. That's why I spend 10 hours a day on your behalf, studying, making friends on the ground, talking to people, not always looking at charts. Charts don't tell me anything about the future. They only tell me what's likely to happen based on the past. I'm more interested in building relationships via my X account and my Instagram account, building up relationships, and I share those communications with you online. But anyway, J&J has gone through a terrible time, still has, got maybe a year or two to go through litigation with its talcum powder and other things. But is it down and out? Now, a lot of people are saying that J&J is going bankrupt. They're talking absolute rubbish. It makes great headlines. It gets everyone to buy a newspaper, but it's rubbish. They're not going bankrupt. They've sectioned off the talcum powder section of their business, and they put it in a little box, and they're trying to get that area of the business to go bankrupt just to protect the company. It's got nothing to do with the whole thing going down the toilet. And we talked, I'll mention in a minute what Jim Kramer said twice now on his show about the stock, and I think he was wrong both times. We're starting to see the stock come back again. What does that mean? Well, the stock has been beaten up for a while. I'm going to share some information about it with you on the screen right now. So let's have a look at the intrinsic value. First of all, intrinsic value. Now, you have to remember, certain stocks you are not going to get undervalued, because if they were undervalued, they'd be gone in a heartbeat. They'd be, if you've got a big blue chip company suddenly showing somewhere it's massively undervalued, it's an incorrect statement. It's already been bought by insiders. It would never exist. Great companies that have huge balance sheets, great credit ratings, are not suddenly going to be available undervalued. You're always going to pay overvalue for a great company, a defined company. It's just not possible. However, if we look at the base case, the best case, $179, then right now at today's prices, we can see that J&J is undervalued. Great, you say, fantastic. What about the base case, which is what we really look at? I like to buy a blue chip company with a solid balance sheet and a AAA rating up to, and no more, it's why I bought Apple this morning, up to 25% overvaluation. That's it. I'm prepared to pay that because the stock is growing and it continues to grow and is proven itself over history. Its dividend payments are increasing. Dividend King's always increasing. Everything great about the company. It's always going to have a slightly overvaluation. That's at today's price of 100, and if you value the company at $130 Now, right now, we're starting to see the company rise to 147. It's moving up now. It's moved up in the last few days. Why? We'll come on to that in a minute. Worst case scenario, 108. There's no way that number makes any sense whatsoever. Even that, though, is only 25% over my margin for error, where I like to buy a blue chip company up to 25%. So even there, it's only just over, and so that's pretty good, right? And that's a ridiculously low price. So intrinsic value is fine. If we look at the relative value, it's up 4%. Wall Street's target is 25%. All looking good. Profit gross, positive gross profit, of course, 76 billion. It could pay off the plaintiffs tomorrow if it wanted to. It's just doing it in the best way to protect the shareholders, and it's got to go about it it's responsibly. It's a publicly traded company. However, let's go down and look at some of the insider trading on this company and why I think it's moving up and why I see it going up 32%. That's the number I put on it. I know it's a funny number, right? 112 billion revenue, which is down slightly. We know that. Operating income is down 7%, 16 billion. Net income up 166%, 34 billion over the 10 years, 168, over 7 years, 117%, over 5 years, 2,141%, made a lot of money over COVID, of course, 3 years, 103%, and 1 year, 80%. Okay, we're looking at the operating cash flow is down 7%. Capital expenditure is up 6%. They're investing, and free cash flow is down 10%. Look at the assets. The assets 192 billion, and the liabilities 117 billion. So it doesn't put a rocket scientist to realize the balance sheet of J&J is solid. The gross margin, the efficiency. Efficiency is everything. It doesn't matter how much you make, how much you sell. If you're not making any profit, it doesn't matter. You want to be an efficient business. If you only sell $10 of a product and you make $9 every time, you're doing very, very well. Your margins are good. Gross margin, 67%. Operating margin, 29%. Net margin, 19%. These are good margins, okay? All very, very good signs here. We're scrolling on down. Fundamental scores, profitability score is a little bit low recently, but still very good overall. Positive gross profit, positive free cash flow, exceptional ROE, and positive operating income. We'd like to see that higher, but it's been low this year. We're aware of that. And of course, the solvency is important too. The likelihood of the company going bankrupt, anything above 20 or 30 is good. We're at 59. So high Altman's edge score, low DE, long-term solvency, positive net debt. We don't like any debt, do we? So there we go. Not too bad. Now, what is interesting though, and this is what we're coming on to now, the valuation and the insider trading. And as I speak to you, it always happens as well, because it's always about timing. Very often when I talk about these stocks moving, they are moving during the time I'm talking about it because of the news. That the reason why I'm making the video is that, this is the action going on right now. So you can see J&J is moving. And for a stock like J&J at $148 a share, nearly 1%, 0.71 in a day is a lot. And these stocks don't move very much, so it's a lot, and that's why my portfolio is really pumping right now. I've got nearly $24,000 here in J&J for good reason. The J&J lowest forecast is 159. Sorry, I beg your pardon. 159 USD. Sorry, I beg your pardon, for a share, which is an 8% upside. That's the lowest. The average is 25% upswing, 184, and then we've got 225 with a 53% swing, which will surpass that the moment we get through litigation. So overall, all good, whichever way you look at it. It's a stock you need patience for, though. Not everybody wants to have patience. Now then, the ownership. Ownership's very, very important. With the ownership, we saw back 9 to 12 months ago, we saw massive selling going on because of the litigation. Insiders were selling. Then over the last 3 to 6 months, this selling has slowed right down. And now we've got no selling. In fact, we've had no selling from the inside of the company and since July 26, okay? And it's continued to go down without any more selling, which tells me we're about to get buying from insiders. Now, I don't want to wait until we have buying from the insiders. I already want to be in, which is why I bought it. I'm trying to be ahead of the market, not behind the market. I'm trying to be proactive, not reactionary. I don't want to be buying the stock like a bloody lemon when everybody else is buying it and now it's popping up and then following the trend. I already want to be in, already receiving my first round of dividends before we start to go up. Look for the value, do the research, see how far it can go down and get ready and already be in by the time it starts to move. So there we go. There's a little bit of information there on J&J. Now, how is the litigation process going? As far as J&J is concerned, and there's light to be shed on the fact they might win this case, that they say talcum powder does not contain asbestos, does not give cancer. Now, they're standing by that. If that was proven to be correct and they win that case in court, we're going to go up 30 to 40% on this stock, which is absolutely huge. How do I know that? Well, if I look at it over the year to date, we are down 15.89%, but we had hardly any growth last year. The stock is all down, not because of revenue, not because of the business, because there's a cloud hanging over with the litigation. Now then, there's another piece of information I wanted to share with you. This man here, we know who we're talking about. We're talking about, of course, Jim Kramer. Jim Kramer is about entertainment, and Jim Kramer is about drama and figures for CNBC. Whereas me, I'm not even for figures of my own. I am all about providing the best for my members and my audience, because I don't do it for the money. I do it because I want to build the best portfolio, the best service for my members. I want to be the most honest person on YouTube TV. This gentleman here is doing it to get ratings, and he was all over J&J. He thought J&J was a great company, and then with the litigation, he decided to sell it all. He then went on, that was about 3 months ago, and which is a bit late because the litigation's been going on for years. However, he decided to get out when it was already down. He didn't get out at the top. Again, reactionary. Didn't get out at the top. He got out when it went all the way down. Last week on his show, he decided to apologize to his charitable element. The charitable trust, and say he's sorry, and he explained why he got out of it and all the rest of it. He doesn't want to be in a stock with litigation. I understand that, but if you really understood that, you would have been out when the litigation started, not when the litigation's coming to an end. So it's reactionary rather than proactive. He got out at the end, and he's already out. Now he's looking to get back in again, and of course the stock is going up. So he's thinking, hang on a minute, I'll wait a little bit because the litigation hasn't finished. Maybe there's a bit more downtrend in it yet, so I'm going to wait. And of course, you sit around and you wait, and then all of a sudden, there, you can point at me. You can point at me, Jim Kramer. You can point at me all you like, but the fact of the matter is, you're about making ratings. I'm about bringing the information to the audience. If you are a Wall Street hedge funder, and you didn't like litigation, you should have got out at the very beginning, not at the end, and then apologize to your audience for saying, now what do I do? And of course, that's now very difficult to get back in when you're out of the stock. Anyway, there's my view on J&J. Has it got more to go down? Well, possibly. Should it go down any more? No. Has it been beaten up enough? I think so. Are they going to win the court case? I've no bloody idea. Can they afford to pay it? Yes. Will it affect the stock? No, they've got the insurance, the backing, the cash. They could settle it tomorrow. They're just trying to get the best deal for the shareholders. It's one for the patient, one for the investors, not the gamblers. So take your time, sit and wait, and then you'll be okay. So I am in. How does that affect my overall portfolio? Well, you can see for yourself, this is what it does for my portfolio. My portfolio today is up 2.73. I'm beating Warren Buffett and I'm beating the overall markets, $49,000. And a lot of that is to do with J&J. So what do you think? Leave me your thoughts below. Now, if you are a member of my channel, you will get exclusive content. Not this one. I'm making this during a video in a live show, but you'll get videos like this. You'll get the information that I get from insiders, that friends I make on the ground, insider trading using the software that I have paid for and partnered with different institutions and companies, looking at a Bloomberg terminal, many things I'm looking at, bringing to my members. It will go live for you early before everybody else. You'll get it 2-3 hours before the general public, and it'll also contain exclusive information which won't be in other videos as well. So another reason to be a member of my channel, perhaps. All right, there you go. There's J&J. Are you in? If you click above my head, you can be part of my X and Instagram, and all my links I'll post above there, and that's where I share some of the conversations. Only last night, one of the astronauts for Virgin Galactic reposted one of my posts about Virgin Galactic, who I'm inviting to be on the show. That's very exciting, and other things are happening as well. Go over here, and we've got the Fed report tomorrow, Jerome Powell, and other things I think you might find interesting. As always, there's my review on J&J. What do you think? Leave your comments in the comment section below. Take care of yourselves and each other.